Hello everyone. Well, the dollar started higher in Europe today because of rising U.S. interest rates in the U.S. overnight, but the decline in European stock markets and the rise in bond yields here sent people fleeing the dollar and into nearly anything else, particularly the safe haven currencies. I think this is just a good chance for traders to get back in on any long dollar trades that they might have been waiting for. Basically, the boat's come back for those who missed it recently, particularly I think with Euro Swiss and Dollar Swissy. As for dollar yen, I generally think people should be looking to buy it on dips, and this is a dip. Today's moves are different from yesterday's. Yesterday, as I said, U.S. bond yields went up sharply, but U.S. stocks went up too. It was a good rise in rates, one caused by signs of an improving economy, and it's one that Chairman Bernanke has said he wouldn't intervene with. But moves like today's, when apparently stocks fell because of worries about the withdrawal of quantitative easing, and bond yields rose for the same reason, are really unnecessary. Okay, obviously when interest rates go up, then the net present value of dividends goes down and stock prices adjust accordingly, but this won't happen so quickly. Back in March, Mr. Bernanke said that, quote, adjustments to the pace or timing of asset sales could be used under some circumstances to dampen excessively sharp adjustments in longer-term interest rates, which is Fed speak for we won't let interest rates go high enough to derail the recovery. So I don't think this is something people really have to worry about, the rise in interest rates causing a big shock to the economy. Well, as for today, the biggest gainer versus the dollar was the Swedish krona, which is interesting because it was the biggest loser yesterday. This wasn't just profit-taking or a reversal of those trades, though. Sweden's first quarter GDP came in at plus 6.6% quarter-on-quarter, or 1.7% year-on-year, the highest in Western Europe. The figure reduces the need for another rate cut in Sweden and is therefore supportive of the stocky. Dollar stocky and Euro stocky are both above their average since last September when they entered the recent range. I think there's room for both of them to come down further as people look for some area of growth in Europe. This is Marshall Giller, head of Global FX Strategy at IronFX, wishing you solid trading.